Okay, nice. So yeah, we're going to kind of define what confidences patterns are, like probabilities, all that sort of stuff, like variables. How do you think in a probability-based mindset? Everything like that. And then we'll go through more technical, some examples, especially of today's. Was live today, morning session, which worked out pretty well. But what is a confluence? What is like a variable? Think of like a confluence. It can be just something that adds to a positive expectancy in a trade. So if you're taking a sell and overall direction is bearish, you're making lower lows and lower highs. That's a confluence in that direction. So multiple factors, indicators that support a particular trade idea or market direction. Think of it like multiple streams coming together to form a big river. There's more force when they've came together. Your stacking probabilities is more. It's a high likelihood, high probability event when there's multiple things aligning in one direction. In trading, this is the only thing you'll be like technical analysis. This is what technical analysis is. You're always giving context to setups, to ideas. You're not just going to be buying or selling based off one or two things. You're looking to stack and align 3 or 4, 5 or 6. More of the time, as many as possible. But as many as possible, that's with a grain of salt. How like you can go overboard, you can go too much. How do you find what to focus on, what to align, and then different confluences, different variables will have different weights. So it could be the hourly candle aligning in your favor. That will have a different weight from low time frame market structure or DXY correlation. So it's a little bit more complicated. Conferences, yeah, technical indicators, price action, candle behavior, market structure patterns, areas of interest, basic support and resistance. If you want to go more smart money, fair value gaps, order blocks, all that sort of stuff. Fundamental. So like if you're looking for buys, a fundamental factor would be that global risk is seen to be higher recently. So we're looking for buys on a higher time frame because there's a lot more uncertainty. Impending recession is the likelihood of that's increasing. Whatever happened with the JPY bank and the crash, US like a little bit of a crash last couple weeks ago. All that sort of stuff, uncertainty in the markets that leads to bullish on gold. We're at all-time highs. That kind of makes sense, aligns. And then to validate these confluences, how do you do that? Because you can have a confluence that you think gives you a positive expectancy that gives you a benefit, but it can actually hurt. It can actually make you less profitable. I've done this example quite a few times, but we'll just go over it again. So 56% win rate over, was it like 300 trades? This is just we're going over confluences and trading, stacking them. I haven't missed that much yet. Okay. So we'll just get this up. So 56% win rate. I used to take like wick fills. So if overall direction was looking bearish and we had something like this, where like price would immediately go in a certain direction without creating a bottom wick, I would take a sell for that wick to flip. And I thought this would improve my outcome, especially on high time frame candles where you tend to see it's rare for there not to be a bottom wick or top wick on certain trades. But if I get that up, no wick, 35% win rate on wick fills. So I thought a wick fill, no wick trade was a good idea, but that confluence was actually had a negative weight. It hurt my trading. The only way I could find that out was through a journal. This is why I say to journal. It gives you objective data on how to improve. Like, it's the easiest way to become profitable. So you need to validate conferences. Don't just like use DXY correlation because I say to. You need to validate it in your journal. So like if I'm confluence DXY 56 goes to 73, that's an increase, pretty easy validating that. And the more data you gather, the more accurate that information is going to be. Yeah, and it's always going to be uploaded to the WOP website. So this is the power of journaling. Record every trade you take. Analyze the confluences. So when you have enough data, enough information, could be 50, it could be 100 trades, review those and see if, like DXY, it gives a pretty big increase in your strike rate, or like wick fills, it decreases your win rate. So you shouldn't be focusing on that. And it'll all be relatively similar. If we're all trading the same way, it's pretty similar. When I do journal reviews on Fridays, everyone kind of has the same sort of things they can focus on to improve. Like if you put in certain factors for everyone, like DXY correlation, more time frames aligning in their favor, taking high time frame continuations, those three things, everyone's journal tells them to do the exact same thing. But it's always good to record, analyze, and then track how these confluences affect outcomes. It's exactly the same as like any other skill, or like tracking inputs, seeing how they affect the output. It's, yeah. Then you can review them. If they lead to a positive expectancy, a benefit like DXY, you can then focus on just doing that, only taking trades with certain factors, confluences, variables, all that sort of stuff. And this will help you refine. I've already done a video on how to refine your strategy. Start broad, then cut down, using that journal, subjective, objective data. Your journal will give you those insights. Think of trading as like a scientific experiment, as a test, a hypothesis. You have all these different variables. You have your pair as a variable, type of entry model, time frame types, time frame alignings, amount of time frames aligning, if it's a wick fill or not, confluences, setups, low time frame, high time frame, market conditions, even time of day. They're all different confluences, variables that you need to define and see how they influence the outcome of each individual trade. This is how you get like objective data on how to improve your own trading and how to improve your own intuition, because certain parts of intuition will be wrong, other parts will be really good. You just want to focus on what works. This is why you need like some sense of consistency and repetition. Like, this is why you need losses as well. So being able to define, like, this is why I said, this is where like clarity comes in. Trading becomes easier when you have more clarity. Define, focus on simplicity as much as possible. Yeah, so I would say define high time frame. Like, it would be, so if your high time frame is like, because everyone's a little bit different, but let's say like this is around like half a day. You could see this as like you're being moving pretty bearish. You could see this as a high time frame reversal. But if you then zoom out to even higher time frame and you see that you're overall bullish, you wouldn't say this is an actual reversal. It would be a continuation of an overall bullish trend. So if you're just like being mindful of like high time frame, like maybe you'd say this is a medium time frame reversal. This would be a high time frame continuation. That sort of stuff. It's not going to be the clearest. It's going to be a bit grey. But if you're looking at this here, or if you're taking a cell and oval structure, yeah, it's being mindful of just that larger time frame structure. So yeah. So people talk about like a probability-based mindset. If you've ever read Trading the Zone, he talks about having a probability-based mindset. But what does that actually mean? What does that actually look like? If you're in the live stream earlier today, I was kind of like going over that. So there'll always be pros and cons for taking a buy or a sell. There's no condition where it'll be 100% buy, 100% or like 0% sell. There will always be a reason to buy. There will always be a reason to sell. But what your job is as a trader is just to take setups where there's more aligning than one favor than the other. So, and that's how you put probabilities in your favor. The more you align, the more your probabilities you're putting. So like, if I'm looking to take a buy, and there's like, I don't know, so sell, buy, there'll always be reasons for both. If I'm looking to take like a buy of a like continuation, you could say like high time frame wise, direction's bullish, you're making higher highs and higher lows, you're buying at like a previous area of interest, you have a high time frame close bearish. Like time of day, you've like created a bottom wick first, you've like created a move, and now you're moving bullish like that. DXY is moving bearish, but you're kind of overextended. There's like one other high time frame candle closing bearish, or there's a previous area of interest that you're near to, or resistance that's higher up that you might like reject off. But here you have more reasons to buy, less reasons to sell. So you then take a buy, and that's you putting probabilities. Like with this much alignment, this might be like a 55% win rate like trade, but that's good enough. If it's like a 1-to-1, that's profitable. 1-to-2, even more profitable. That sort of stuff. So that's what it means to think in a probability-based mindset. You're not thinking this is a certainty this is going to happen. I think this is more likely to happen than this, because there's less aligned in that direction. So identify your key factors. For me, my key factors is DXY correlation, structure, and time of day. It could even be time of candle. Like what is the 4-hour candle looking like? Trading around that 4-hour candle. Is it with high time frame or not? All this sort of stuff. So, as I said, assign weights to different confluences. So, based off how much DXY improved my win rate, I would give it a bigger weight than something like let's say like a type 1 or type 2. Type 1 or type 2 has a lot smaller of an increase in my strike rate profitability, but DXY has a big increase, so I'd focus on that. Then you're just kind of looking to stack the heavily weighted variables or confluences in your favor. We're going to go through some examples a bit later, but yeah. This is hard. You have to accept that you don't need to know what's going to happen next to be able to make money. a lot of times if you're like hesitating on trades, like what if it loses? It can lose. The best setup in the world can still lose. There's no 100% certain outcome. You're always working with limited information, and there will always be a reason to not take a trade. But when you have clearly defined your variables, your confidences, those entry types, areas of interest, market structure, counter behavior, correlation, time of day, when you've clearly defined them, you've practiced them, you have objective data, you've built that intuition and experience, it's really easy to embrace the outcome because you know you're putting probabilities in your favor, because the next trade, one or two trades, doesn't matter. But I'm certain over the next 100 or 1,000 trades, there will be a certain outcome. So I'm uncertain about one or two trades. I'm certain about the next 100 or 1,000 because I know probabilities are in my favor. It's like being the casino. The casino doesn't really care that much if someone hits a jackpot or wins. They know over the long term they're going to make money because probabilities are in their favor. So focus on the process. You can do good inputs, good behavior, and it can lead to a loss. It's a bit hard to psychologically put your head around mentally, but you can't assign value to a winning day. So a good day isn't a winning day. A good day is a day that you followed your plan. A good day could be a losing day if you followed your plan. That's how you should look at it. Your goal should just be to consistently execute on your plan every single day, regardless of what happens. Not trying to force a win, because that's where a lot of psychological issues come from. Trying to control the uncontrollable. So, also manage your risk. If you don't have a stop loss or you haven't predefined your risk, it's hard to focus on the process, acknowledge uncertainty, because if you're not managing your risk, you're not acknowledging uncertainty, because there's always a chance it can lose. And then each trade, win. If it wins, you get a external reward of profit. If it loses, you get an internal reward from learning. So I value learning above all. So losses tend to be more valuable than wins for me. But focus on continuous learning. If you just focus on learning above all, focus on getting a little bit better each day, focusing on the process, it's inevitable that you'll get or achieve whatever you want in trading and in life. Okay. So I've been through this quite a few times with the journal, but objective, subjective data, it's always mechanical systems strategies will always be limited because they're not very adaptable. They are very clear and simple and easy, but you're not really going to get a high win rate just off a objective system. So there will always need to be intuition in a strategy and approach, but you still need some objective data to actually prove that it works, to prove the choices or inputs that you're doing are correct. Think of all these different variables, confidences that you're aligning, like a 1 minute type 3, avoiding no wicks, wick fills. If I just did that, it's a pretty high win rate system. So objectively, that's a positive expectancy. Then if you were to look at trades here, this is how you can then review those trades subjectively and look at that. So look at this market structure. You did have an overall shift, clear break of a low, clear break of a high, entered off this little break of this high, a little bit of a shift here, low time frame. It's like a shift within a shift. I find these type of trades tend to work out very nicely. It was very range bound. I am surprised it actually held that long, but holding it to above that high. Shift within a shift, very nice. Continuation. DXY, looking very bearish, correlated very nicely. So yeah, that's how you train your subjective, and objective is just do that, like all that stuff like that, win rate, output, everything like that. So yes, subjective will always have a higher skill ceiling than objective. Like it's really hard to get an extremely high win rate with a good risk reward just using objective data. No strategy will give you this like holy grail, but you can make any strategy into that with enough practice, enough preparation, enough subjective learning, intuition. It's like a lot of like people like, what's your strategy? What's your strategy? Especially in like social media comments, all that stuff from like maybe newer traders. Like they're all so focused on getting a strategy that's profitable, but like you're forgetting that like trading is a skill, and you're not going to become profitable with the best strategy in the world if you're like a couple months in. Like yes, you can learn Tiger Woods' strategy for golf, but you're not going to be able to hit the ball the same way as he does because you don't have the skill from the experience, from the practice, from the preparation. It takes time. Strategy is kind of meaningless. It's like changing. Intuition is what makes it work. The trader's skill on themselves is what makes it work. It can be used as a lens to make everything like easier, more defined. Everyone who trades my exact same way, puts in the effort, puts in the work, they can all improve their approach using the exact same things that I could have improved my approach with. Yes, there's slight differences there, but it's good for guidance, but you actually have to put in the work to make it work, if that makes sense. You're not going to be handed anything. If it actually did work like that, like people still believe like a course or an indicator or signals will make them magically profitable, but you have to put in the work. This is why like I'm going to be like changing the course a little bit, because like I did it because people asked for it, but a lot of people are asking. It's just like attracting the wrong type of people. So, but yeah, how do you learn? How do you like get like profitable the quickest way? It's pretty simple. If I just get this up, take trades, take a lot of trades, discuss that with other people, and teach others. Quickest way to become profitable, just do those two things. But they're like kind of uncomfortable. A lot of people just want to be like read or watch something and expect to instantly understand it. But the boring thing, like having a trading plan, having a journal, that's kind of where you get the most benefit out of. So review your past trades, refine it through looking at those variables like conferences. I stopped taking no wick trades. I started taking DXY correlated trades. My win rate increased from that. I stopped trading at certain times. I started trading at the second hour of Asia as well. And you can prove through subjective, you're more confident at certain times, you're more confident on certain pairs, or you realize that your win rate is higher using certain different conferences. This is how you become profitable. This is how you improve as a trader through this exact approach. It's like scientifically proven, sort of. It's pretty much scientifically proven, because like this exact thing isn't just for trading, it's for every skill. Inputs, process, outputs, feedback, review, learn, refine, improve. If you want to start a business, if you want to do content, if you want to get good at golf, you're going to be doing the exact same thing here. So, review past trades for subjective information, subjective data. Train your eyes to see what's working. Look at why certain winning trades, like why there's certain like variables or commonalities between winning trades, and look at commonalities between losing trades. Collaborate, compare, ask questions, help, make notes. Like Malik Here's some of the best notes he's posted in the chat. Very clear. He won 4 trades in a row today. Why is that? Because he put in the work. He made like a mind map. He's so prepared that it's a lot easier. You've clearly defined your learning. You're teaching it to other people, which increases your learning more as well. The more like you think that like you're getting the most benefit out of this teaching, but like I'm equally getting benefit, if not more, because the more I teach, the more I learn. It's reinforcing certain things. I learn more things when I'm trying to convey more complex topics. It makes it more clear for myself as well. So collaborate, compare, make your own mind map. Put effort into your journal. Put effort into your trading plan. Make it as clear, defined. You know, like you could actually be a lot more like clear defined about how you're doing certain things. Like what is high time frame? What is low time frame? How are you going to manage your trades? How are you going to enter, exit? All those sort of things. What is a breaker structure? What is a pullback? When should you trade? How do you want to see the 4-hour setting up for you to take a trade? All those sort of things. And then intuition. Nothing beats experience. But a caveat here. If you think that if you just trade 8 hours a day, every single day, for 5 years and you develop intuition, you're wrong. Because, going back to this, like if you take a trade, it results in an outcome. Because trading is a probability based approach, like based game, the outcome of 1 or 2 trades is random. So you can't have accurate feedback of 1 or 2 trades. And your mind, you won't be able to remember the past 10 trades. So I've seen people trade for 6+ years, pretty much every single day. They're still not profitable. They have shit intuition. Why is that? Because they don't have a journal. They're not reviewing that journal and learning from that. You need feedback to learn. And if you're not doing that, like you can trade for as long as you want for like a decade and still not be profitable because you're not learning, because you don't have that feedback. Accurate feedback from journaling trades, from reviewing those trades. You need enough data points to be able to draw an accurate conclusion from. You can concrete that. You can like learn quicker as well from teaching that to other people and seeing what works for other people as well, and like adapting that into your own. So this is why it's set up as a community, not a course. It's just a bonus. But yeah, nothing beats intuition, especially for probabilities. Your gut feeling is subjectively, subconsciously, you're always looking at patterns. You're always being mindful of all these little things. So it can be the shape of a candle, like how bullish or bearish the close is, all those sort of things. Nothing beats intuition. It's like you kind of automated certain parts of this. So instead of thinking consciously, like having to write down, you've had like a break of a high or low, you had a 50-minute candle looking bearish, like all this time frame looking bearish, you had the 4-hour flip, like subconsciously thinking it, subconsciously you're gonna automatically do it, and that results in a feeling. And the more effort you put into being prepared on your journal, on reviewing, on teaching, the more accurate this feeling is going to be. And that's the one thing I've learned. So some examples. That was kind of like a bit of a overview of probability-based mindsets and stacking conferences. What is that? Why you should do that? How you can give weight or validate conferences. And then here we'll go into some examples and like more like practical of an example. Yep, and you see the same setups tend to happen at the same times. Kim was saying this. Trade the same time on the same pair using the same strategy. You see the same things at the same times. It just keeps on happening. So what we've been seeing recently, I'll go to this. you have the 4 hour open, and then the 4 hour opens, you immediately move in a direction here. You immediately push in a direction on the 4 hour, and then maybe around a bit later, you have a rejection, take out a high, and then the candle flips. This setup happens a lot. Like this exact setup. Like if the 4 hour opens and you immediately push in a certain direction, I'd wait for a reversal of that. It just keeps on happening. Where you have that, take it on the type 3 shift, shift within the shift, all that sort of stuff. So like if we just go back to the day before, the 4 hour opens here, you open, immediately go, create top wick, and then you flip and push. So kind of the exact same move happened 2 days in a row, and I've taken this trade a lot of different times. So remember this sell as well was a shift. You open, immediately go in a certain direction, creating a wick. You have a shift here where you make a high, break a low, enter on the pullback, and it'll push, flip. Same move happens at the same time, all that sort of things. And that can be a confluence. So we'll go through today's example. Here. Yeah, so that was a valid buy, as they say. So I was looking for either a buy off this area of interest here to kind of have a move here based off. So if we just look at 1 minute time frame, you're making higher highs and higher lows. You've broken a high here, and this is kind of a good example of how to look at this. So okay, so low time frame, you're making higher highs and higher lows here. Made a higher high, so that would be a reason to buy. On the low time frame, 1 minute. If you just go on to like hourly high time frame wise, you're also very high time frame bullish here, so that means another reason to buy. So high time frame wise, very directional, very bullish. If you look at this hourly right here, you've broken a low, barely broken a high. That is kind of like a structure shift as well on the hourly. Another reason to buy. But price is kind of ranging. You're not really breaking highs, not really breaking lows, and you're kind of around highs here. So that'd be kind of a reason to sell. Another reason to sell is that you kind of overextended on a high time frame. You're at all-time highs, and you're in the first half of the day, so that'd be a reason not to buy. But if we just go back to that 1 minute here, hourly, you have a type 2. So reason to buy, a bullish hourly type 2. You have a close beyond a level, and you have a 4 hour type 1. Another reason to buy. So currently aligning in the favor of a buy. I was looking for a buy around here, but we didn't really get that. It immediately moved bullish. I entered off this little low time frame type 3. You had a break of a low, break of a high, and on the pullback for a small little buy. And for type 3s, they give me a really big increase in win rate, so that's a 2 weight there. Little buy, even though you're at a high time frame of interest. But you have something, it's aligned in your favor. You have more reasons to buy, less reasons to sell. So there. Quick little buy. So yeah, those are my two scenarios. I was either looking for a sell I was looking for a buy if we came into here. I was looking for a sell if we immediately push it in a certain direction and then flipped and rejected this interest. And we did get that around 11:30, which is really nicely. So a big shift here. Now if we go looking for sells, so we've had a big rejection. So sell, area of interest, overextended first half of the day. Buys, you're still overall high time frame bullish, like 4-hour close bullish, but you had a type 3 shift on sell bias here. Type 3 shift. You had a 15-minute close bearish for type 2, so that'd be another reason to sell. But price is still kind of ranging. Reason not to buy. Not the clearest, but you had a big rejection type 3 shift there. So you can enter a sell on that pullback, but if you want added confirmation, added confluence, you can wait, which is what I did. You had there a bit of a change. The 5-minute candle flipped, and you had a bit of a 1-minute shift. Where, like, if you look at the low time frame, like that, you can enter based off that. So that's 2 more confidences stacked in your favor. As well. Might be a bit hard to see, but that's kind of what it was looking like there. So pretty clear shift, where like you're making higher highs and higher lows, have a big reaction. Then you have like a shift within the shift. Average is normally around 1.5 because they close my losses early, but it's kind of like adapting to price action. Okay, so kind of looking pretty bearish here. Let's just continue this trade. You also have a break of this low here, so add more confirmation, and then you have a 30-minute type 1, so like more confirmation. Pretty nice. I just managed this trade because there's low volume and had a small win, but that's kind of like how you're aligning probabilities in your favor. And I'm doing this subconsciously to get a gut feeling of if I should buy or sell. And I look to validate those feelings based on reality. So, a common mistake people make is that they think emotions such as fear or greed is bad. These emotions are exactly the same as your intuition. You just need to get good at validating it. So, like, how do you have really good psychology? How do you do all this sort of stuff? You just need to get good at validating the fear the exact same way you get good at validating the intuition. So I had intuition around that wick fill. That was wrong. That was not right intuition. But around DXY, that was positive. And like, I validated that intuition. You can act in fear when it's based in reality. So me closing this winning trade early after I see this big 1-minute candle rejection, closing bearish, I fear that reversing. It's based in reality, so I close that winning trade early. Emotions aren't good or bad. There's always going to be a reason for emotions. You just have to get good at validating them and acting in accordance with them when it's based in reality. And that's a skill that you can improve and work on. This trade here was exactly the same. We were failing to break lows on this area of interest, so I closed early. I managed it the exact same way I did here. Had a bit of rejection. I don't like when volume is decreasing when you're making higher lows and lower highs. I just don't trade those conditions. But in this scenario, price went on without me. That's okay. It's always going to be probabilities. There's always a chance that you make a good decision and it doesn't go in your favor. That's okay. So, I acted out of fear or reversing. In both scenarios, one ended in a win, one ended in a win as well, just as not as big of a win as I would have liked. But that's like, you're not going to be perfect. You thinking here, like, if I thought, oh, I should have held that trade based off this outcome, that's a bad, like, you're thinking about the quality of the decision based off the outcome. The quality should always be based off the process. I don't hold trades that are ranging. I don't hold trades where volume is decreasing. So I'm taking that trade based off the outcome. Whatever happened next after I close that trade doesn't matter. Maybe if I journal that and I see this thing keep happening next 20 or 30 trades, then I might make a change. But I'm not going to make a decision based off one trade because it's random, uncertain. So yeah, that's an example. Stacking those things. You can also stack it while you're managing a trade. So like having like it break a low is added confirmation, 5 minute as well, like a 30-minute type 1 added confirmation as well. So I'll tend to add when you have like a high time frame candle close in your favor, when it's like pushing with nice volume, all that sort of stuff. So yeah, I think that was, yeah. So probabilities, confidences, stacking them using your journal, creating a trading plan around what confidences give you the biggest increase in your positive expectancy, your outcome as well. Using this as like this is like what you should be mentally doing every single day as well. Like trade journals, everyone's trade like journals can kind of be improved by the same things. If you just like, what is it? Like pair conferences tend to increase them. Like high time frame, like a type 3 shift, tends to have a pretty high win rate. All that sort of stuff. But always be a little bit different from person to person. I find the more time frames you align, the higher your win rate is going to be. So same in Yuchen's journal, same in my journal as well. If it's 5 time frames or more aligning in a favor, that tends to result in a higher win rate. So that's kind of an example. There'll always be reasons to buy or sell, but yeah, just try and make it simple as easy as possible. Yeah, I can share the screenshots of, or I can share this presentation as well. And if you want to learn, collaborate with others. So there's a lot of information here, but hopefully, like, this is kind of like the basis of the approach. Stacking timeframes, stacking probabilities, stacking confluences, market structure, counter behavior. You're trying to give context. You're trying to tell a story. Where are we? What happened? What has happened? What are the conditions? And based off that, what's going to happen? What's likely to happen? And you'll always be, there'll never be a certainty. It'll always be uncertain. That's what makes it hard. Any questions as well? Let me know, because this was kind of a lot. Yeah, so also like maybe journal the reasons why you're exiting. So is it because it's at an area of interest? Is it because it's volumes decreasing, or is it because you're exiting based off fear? Why are you exiting a trade? Why is it only ending up in small profits when you're taking good setups? Look for like the common factor there. Like, I tend to just focus on small scalps because it's consistent, it's easy, simple. I like to trade in a way that I can consistently do every single day. And it's probably good to like. There's a video as well in the past calls section on how to refine. But like, yeah, hopefully like this kind of like explains kind of the scientific method of like developing a trade hypothesis. Like your trading plan, think of it as just like your hypothesis. Like if you do these things, it should result in a positive expectancy of trades. Okay. And also volume as well. Like intuitive like volume is another way you can like look at as a confluence. Lots of different things, but I think the setup I've been really enjoying recently is just that like waiting for the 4 hour to open. And it doesn't even matter if you miss a trade or setup. Like you can take a like buy to like have it move as well, but waiting for the 4 hour to open, if it like moves the volume in a certain direction, just checking like a correction of that, like if it's with an area of interest or like direction, like a shift as well, like a correction of that, like the candle flip. This has been happening quite a lot. So like so let's just say like you have like a continuation sort of here, and you have something like you kind of made a high. You're like kind of coming back into this, like so you might take like a continuation, or it might have something like this where like you break a low and then you break a high. Like this would be like a that's me. A continuation type 3. Thank you. Thanks for the bless. So you break a low, break a high. It's a continuation. I tend to take this less often, but it's still valid. You have like extra confluence instead of just like taking a break and retest, or sometimes it doesn't always come back into here. But as well, this gives you a better entry or like better. It gives you like low time frame structure. So if you're gonna like enter here, where would you put your stop loss? Below this low, that's a pretty big stop loss. If you're waiting for a shift, where do you put your stop loss? Below this low. So you can get a lot tighter of an entry. Exactly the same as what I did today. Instead of trying to get the perfect entry, where you'd have a big stop loss, where you think you're going to get a good risk reward, even maybe above this candle, like a bigger stop loss, you can just wait for a shift or for some added confirmation, put it below this low, entering with volume for a nice trade. This is why I like to tend to wait for like low time frame structure to shift, because you have structure to put your stop loss behind instead of having like a big one. The 4 hour flip happens it happens London, New York. It's just been happening in A2 recently. Like Asia has had a really nice volume recently. It's been really nice. Each session will just have like little different characteristics and little different things. I don't really have much data on the 4 hour London. because it's pretty late and I don't really tend to trade that late in the day. So I think they both work. They both work. It's just like, I think if you want to know which one you should be trading, which is the easiest, like in your routine, what would you rather trade? Would you rather trade earlier or later? That's up to you. And also track. Maybe trade both sessions and see which you're more confident in or which gives you better results. And when I enter based off volume, it is kind of intuitively. So think of it as like ticks. Like it can be the size of a candle, how much price is moving in a certain period of time. That's like volume volatility. That's kind of what I look at. Like how is it like? Is it going back and forth, or is it like that? That's kind of, yeah, intuitively what I look at there. Yeah, it's like if you focus on winning each trade or trying to like win, it's like maybe you might become profitable. It's an if. You just focus on winning. You might make money over time. If you focus on learning, getting a little bit better each day, it's inevitable that you'll get what you want. You become profitable, all those sort of things, because you're getting a little bit better each day. So you'll pass the profitability line if you just get a little bit better. If you just focus on winning, you'll plateau. All that sort of stuff. 1% better every day. It compounds. If you've been like getting better 1% each day for like 100 days, 1% of 100 is more than 1% of 10. I'm not very good at maths, but that makes sense to me. So yeah, things compound, all that sort of stuff. You think results or learning is linear, anticipated, so in the beginning you're worse than you expected, but within months, after a long period of time doing the right things, it's exponential, the results and the learning, because things compound upon itself. This is the exact same thing in everything else I've done. People in the top 10%, maybe around here, and the people in the top 0.1% are like 100 times better than them. Like the improvement compounds, get exponential. Exactly the same as money. Like the top 0.1% of people hold like 80% of total wealth. This is just like a universal fact, Pareto principle, all that sort of stuff. But yes, I'm going to post all these slides. Maybe it's good to go over them. I think this is like a really good explanation of like probabilities. How do you like validate all that sort of stuff? But yeah. So that's the main thing. Identify your confidences, your variables, validate them, stack weights, combine, analyze, all that good stuff using that journal for building objective and subjective data. And if you're not sure about certain things, like please ask questions. There are no dumb questions as well, because like everyone's probably thinking the same thing. The quickest way to learn is just to like, yeah, be open to that. yeah, so this is just from notes and stuff that I've like put together. I am putting together some stuff as well. I'm gonna do like I'm gonna break it down into like quicker things. Like instead of having an hour-long video on entry models, I'm gonna do like a 5-minute video on a type 1, or a 5-minute video on a type 2, or like a 10-minute video on how to find direction. So I'm gonna like break things down into more clear, defined parts, make everything a lot easier to understand as well. And I'm gonna, instead of it being a course and the past webinars, I'm gonna put that together as all resources. Whereas it's gonna be like the simple basic stuff here, and then you can go into more depth on the webinars, which will have information like this that I've gone through, kind of explained in more detail. Because I understand that it can be boring listening to an hour-long video of me rambling, going back and forth about topics. So I'm going to make this more clear and succinct or concise. But yeah, I'll probably do another live stream tomorrow morning. I'll make sure to add everyone. This morning's worked out pretty nice. Pretty clear and clean. But yeah, the consistency, you're just doing the same thing every day. That's just what you're focusing on. 23. Getting kind of old now, 23. And if you have any more suggestions as well, put them in suggestions chats. I'll be doing trade reviews on Friday. And gold has been very interesting recently. Lots of volume, which is nice, at all-time highs. Imagine if you took this shift here. Holy. Look at that. So yeah. And like, yeah, as always, I'm heavily using like DXY correlation. Like today, it was like heavily utilizing this. Yeah, I'll share this. I don't calculate lots. Like I like kind of mentally do it. One lot is $10 US dollars, so I just do it based off that. It's pretty easy, like simple. Like if it's a $10,000 account, I would use one lot if my stop loss is 10 pips. I think my biggest win was around like 14, 15k. Vantage doesn't have any commissions on gold. It has very low commissions on USDJPY. I risked a lot more on the account flip, so it was around 30%. That's kind of the benefit with like higher win rate systems, like smaller scalps. You can get away with higher risk as well. I guess for Vantage, it'll depend on your region, what account type you have. So I'm in Australia with a professional account, so it can be a little bit different based on what region you're in. So I always check based off region, account type on the website in your region. For flipping 1 to 500. If you just want to trade normally, 1 to 30 is more than enough. If it's higher, bit higher risk, 1 to 100. Like I can trade with 1 to 30 or 1 to 500. It's just like you don't really need. It depends on what you want. How much do you care if you blow your account? Yeah. So if you're making money from trading, you can either use it to further compound your account, personal account, or you can use it to purchase prop firms, or you can use it to diversify. It can be like dollar cost. I dollar cost average into ETFs. I'm not like I recognize how hard it was to become profitable trading gold, so I don't expect to be able to pick stocks. I just every period of time I put money into ETFs. I save most of my money. I don't really buy anything because for me, I value time, freedom, napping, reading above a car or a watch. That will make people look at me and think I'm cool, but I don't go outside, so I don't really have that opportunity. So for me, like freedom, that's the biggest thing. That was kind of the whole point of everything. And like, you want to get to the point where like trading 1 or 2 hours a day, which is what I do. That's like, yeah. And you can do other things like you can use profits to go into other, like you can try other businesses. You can like grow other income streams, or all that sort of stuff. I don't want generational wealth. I don't want to give my kids a bunch of money because I think they'll probably end up little shits because of it. The benefit from money, I guess, like, or like happiness, it doesn't come from money. It comes from like doing the things that like just as a byproduct give you money. So like providing value, improving skill, anything like that. Or if you just enjoy certain things, like it's a byproduct. Like having the money doesn't actually mean anything. It's nice to have like freedom. Like that's like the like money will buy you happiness if you use it to have freedom over your time, over your choices, over how you where you want to be, what type of person you want to be. But if you're going to buy a bunch of things and think that'll make you happy, fortunately, hedonic adaptation is a thing. And yeah, except skins in League of Legends. That's true. The $500 Ari skin. I've never been happier since. Real estate, I'll be kind of careful. I think historically, just for inflation, real estate from the past 100 years hasn't been a good investment. It's only been good over the past like 20, 30 years. So I'm kind of worried. Like I thought I was going to buy real estate and get into that, but I would rather just be free, like be unweighted by things and dollar cost average into ETFs or compound personal accounts and prop firms. I don't know the Judas swing. Everyone kind of has like different names for the same sort of things. But yeah, it's a bit of like a, I don't know, take out a high, then reverse, that sort of stuff. I just look at it differently. So many different names for different things. If you love cars and you're a car guy, have that as a goal. That's completely fine. For me, I'm not really a car person. Um, but I love books, so getting like special edition books, like a book, like an actual library, personal library, that would be something that like be really careful about what you desire, what you choose to desire, all that sort of stuff. Would I teach my kids trading? If they wanted to learn, I would teach them, but I wouldn't really force it on them. Trading is kind of hard, difficult, very painful. So you have to like want it. You can't really like force a person to do that. One of the best things I did for my trading was I got a job. You'd be surprised at how many of your psychological issues, problems stem from just not having enough money in your own personal life. So when I got a job, it was a lot easier to risk my money because it meant less because I had more of it. You need money to make money. Think of a job as a stepping stone. It's a tool to get to where you want with trading. And maybe you can actually learn a thing or two from a job as well. How to deal with people, how to talk to people, that sort of stuff is pretty good. It depends on what type of job. I was in an office job. I was working in like for a broker or a trading platform, so I could look at charts. People didn't care, so I could trade my phone at work, looking at charts because everyone else was kind of like other people would look at charts because it was at a company that was a trading platform. If you're office job, there's like forex 24 hours a day. You can trade before or after. You can make it work. It's not the most convenient, but you can make it work. And even like the structure as well helps a little bit. Like instead of trading the whole day, you only have a certain period of time to trade. That can help. I don't work there anymore. It was full time as well. Yeah, exactly the same thing. Like it was mainly stocks. It wasn't like forex, but I saw people lose hundreds of thousands of dollars. Most people, like 95% of people, lost money. It was very rare that I saw an account that was green or positive. Most lost money. Everyone held onto their losses. Everyone cut their wins straight away. I would never do options. I don't think anyone retail should trade options. There's so many better things out there. Everyone that I saw that traded options lost money, but they also weren't very smart to do that. So yeah, a kitchen would be hella hard. Yeah, you can like if it's too hard to do it while you're working a job, I would probably recommend like having a period of time outside of that. If you get back from work and you're really tired, that can be tough. Maybe you can wake up early or later. There's always a way to make it work. It can just be sometimes like inconvenient. Yeah, yeah. I got pretty lucky with that job to get it. It was like it's a good job. It can be hard. Like 9 to 5. It's can be a bit like it's a bit boring. It's not challenging, but it's like I don't know. It's kind of it can be a bit difficult to leave a good job, as well. Like, it's pretty chill. People are kind of like nice. There's always pros and cons. Like there's no. I'm not going to be like 9 to 5s are evil. You can do both, make it work. There's like so many different ways, so many different paths in life. There's no good or like there's no one thing that you should just focus on. Just find what works for you. And like I get like if you were to become profitable, like you'd only trade 1 or 2 hours a day. It's a bit boring. Trading's boring. You'd want to be doing more things as well, like other things. Like this is why I like creating content, doing other things is fun because like trading's only like a limited amount of time. It's a bit boring. There's like other things I can be doing that's like more fun. But yeah. So I'll upload the recording to WAP. Bit of a revamp around the education, moving all onto Discord with more concise videos as well. I'll also share this, and I'll catch you guys tomorrow morning and on Friday for journal reviews. So yeah. All good. Okay. See you guys.